Hello everyone. So today we are going to discuss another penny stock named Lathim Metals and Industries Limited. If we look at the price of the company, which is trading around 16 rupees 80 paise per share, the company is in the business of trading and manufacturing of steel products and real estate development activity. If we look at the company's various profiles, so the company is having a good land bank of more than 1,000 acres located in Khapoli, Pali Road in Mumbai and Pune, between Mumbai and Pune. And the project includes Samruddhi Farm, Vasudha Estate, Vasudha Orchard, and other portfolios as well, like Latim Hospitality, which includes Saj Restaurant brand in Mahabaleshwar and Malsej Ghat. Also, company is in the process of developing an hotel in Panch Tiger Reserve, which is around 90 kilometers from Nagpur. Company is operating a dining restaurant in Goa. If we look at the price revenue breakup, so the company is having majority of the segmental sales from goods of steel goods, manufacturing and selling of steel goods, and the sale of land comprises of mere 3% of their total revenue. However, if we look at the other factors, so the company has been in the process, sold a land parcel at Village Taluka, which is around 7.56 crores, and that is utilized for the repayment of debt and working capital of the company. If we look at the other factors, so the PE of the stock is around 19.4 times, which I would say, which is we look at the peer company, so which is less than what the industry PE have, that is around 33 times, but the company is having PE of 19 times. So the company is said to be an undervalued company, and there is a lot more potential of the price increment in the coming future if the company sustains their profitability and the sales numbers. If we look at the ROC, so ROC is more than 20% and RO is also more than 20%. So the company is having a decent and a good ROC return. So here we can give a plus factor to the company. Also looking to the quarterly sales numbers, so the quarterly sales numbers increase to 71 crore rupees from 58 crores in a quarter of the previous financial year. If we look at the bottom line of the quarterly bottom line, so the quarterly profit numbers are around 3.2 crores. That is the highest quarterly profit the company has seen in the last 10 years of time, whereas the March 24 quarter stood the highest, clocked the highest top line of around six times of the sales, which was in March 23, and it stood at 348 crores. So the company is consistently giving sales growth numbers. However, the profitability, operating profit margin takes a jolt, and it is in the fluctuation mode. Sometimes it becomes negative, then positive, then negative. Now it is around 4%, so we have to look into that, and accordingly then we decide. And this is not a time to to get established that the operating profit or the margin of the company is this, because also the company is in foraying into a real estate business, so the operating profit margin can differ variably. Currently till now the company having 97% of revenue from steel, and that is also fluctuating. So if the company is having an operating profit from sales of land parcels that are situated around Mumbai and Pune X road, so that would also give more fluctuation. However, the profitability margin in sales of land parcels are obviously more than anything, because that is purchased solely for capital appreciation, and that is easily seen in operating profit. But till now, till for the time being, the company is having an operating profit margin in too much fluctuation. So that will be the reason. I think that the company is a company which is mostly not a very established company or very big company. So the company have to play with or engage with to all the both those factors. Either suppliers power, company neither have a supplying bank suppliers power, neither the company have a seller's power, nor the company has the company cannot negotiate with their buyers, and the company cannot also negotiate too much with the suppliers. And in between this, the company have to cripple its operating profit margin, and that is the reason why they have to goes to negative operating profit margin as well. In sometimes, if, as we all have seen, that the company in the last 3 years consistently has a negative profit margin, then company rises up, then again company takes a leap of minus 8% of operating profit margin. So these all are the things that we have to consider. And obviously the sales numbers has seen a tremendous growth, because in the last year the sales in that is 60 crore, but now it's 348 crore. So the current year profit and sales number are very good if we compare it with its historical records. So the current year profit numbers, if the let's see that whether the company can maintain their profitability numbers and the profit growth numbers, because only with the only current year sales and the profitability numbers we cannot determine the company. However, it gives a sign and the insight for the movement in the stock, that we have seen the company that is from 2 or 3 rupees to now rating around 16 or 17 rupees, because the company has shown a huge profitability and the sales number. But we have to look that whether the company maintains its sales and the profitability number or not. If we look at the equity capital, so the company is having around equity capital of 11 crore, because company has done a stock split, and that makes the stock from 10 is to 1. So the paid up share capital now stood at 1 rupees per share. That was earlier 10 rupees per share. So the company is having around 11 crores of stock split, where the company has issued a right shares of around in Jan 24 around 7.5 rupees per share premium. It means that the company charged from 8.5 rupees per share, and that is the support level of any shares. It means the promoter or management thinks that the price of the company cannot go beyond 8.5 rupees, cannot go below 8.5 rupees per share. And that is where the bottom line, that is where the lowest point, or that is the price which the original and the existing investors are willing to pay in the company, of around 8.5 rupees per share. So that can be considered as an support level for company as well. If we look at the dividend, so the company is also paying a decent dividend of zero point 0.5 paisa. It is not much, but the company having a pricing of 16 rupees and a market cap of 150 crores is decent enough for a company like this. But the company has not given interim dividend in the last 2 years of time. The company has given in FY21 of 5 paisa, then FY22 of 5 paisa. However, the profitability numbers are good. So let's see, there may be a chances that company may give the profit dividend to retain their existing retail investors in particular, or attract new investors as well. If we look at the trade payables, so the trade payables are from 7.2 crores to 18.66 crores. So the trade payables has been increased so far. So that is the reason, because the company has piled up too much of inventory. So the company has piled from inventory from 30 crores to 75 crores, which is around 2.5 times of their inventories, which was a year ago. And that is the reason why the trade payables for the raw materials has increased substantially from 7 to 18 crores. And also the liability borrowings, that is around, if we look at the borrowings, so the borrowings is around less than a crore, and now it stood at 33 crores in long term, 12 crores in short term, and lease liability also ballooned to 3.5 crore rupees. So around 50 crores of borrowings, and the other liabilities also ballooned up. But other liabilities are in line with what it was in last 2 or 3 years of time. But the borrowings has been increased by around 50 crore rupees. That is being utilized. If we can say the fixed assets has been increased by 90 crores. So if we look at the borrowings, so 20 crores, let's say, is being utilized in the fixed assets, and the other assets has been increased substantially, like inventory. So the inventory has been money has been utilized for inventories as well, which is around, I would say, from 30 crores to 74 crores. So at least 44 crores of money is being utilized in inventories. Then trade payables has been ballooned to 3 times what it was in year ago, and the company having a cash equivalents of 1 crore. So company is in totally an expansion mode, and company want to expand its existing operations as well, because the inventories, the kind of inventory the company has piled up, that is totally, I think that is of raw materials solely for the manufacturing activity for the time being. And the profit of operations, the cash from operating activity, that is the reason why the cash from operating activity in this case shows negative. Cash from operating activity if shows negative, then we have to look into one factor, that company, whether the company can pay off their debt or not. So the company is paying interest of 6 crore rupees, but the proceeds from shares are nothing much. So in this case, the company is not having cash from operating. The company is not having cash surplus from operating activity, and company have to pay their interest payment of 6 crore rupees. So if you have no cash surplus from operations, and you have to pay an interest of around 6 crores, it means that you are paying your interest from shares proceeds or from borrowings. and that is the situation where there can be chances that you can go to a debt trap situation where you consistently take a debt to finance another debt, then take a debt to finance another debt. So that is where we have to look into as well, and this is the scenario where the company is going through. I'm not saying the company is in debt trap, because the company is in expansion mode and company solely want to expand, and the company has used the proceeds for mm, I would say company has used the proceeds for many reasons. But also, if we look at the proceeds from borrowing, so the company has taken a proceeds for repayment of proceeds. So company is I think that we have to look into that deeply, and then we will understand that the company does not have a cash surplus from operations to pay off his interest payments. And for that we have to look deeply, and if we look at the as we all have heard that the company has sold off their investment assets of 7.5 crores, a land parcel. But that is not sufficient enough, because also the company has purchased some fixed assets as well. And we have to look this financing portions as well, because that this is the portion where if any company which is showing too much profitability or anything, the first and foremost thing of every company, you must look that they have a loan, and they whether they have a cash surplus from operations that are sufficient enough to pay their interest or not. So in this case, the company is having cash surplus of around uh, no cash surplus. Company is having cash from operating activity, that is negative 9 crores, and company is paying their interest by taking another loan or some another finance, some another finance not from their operations. So in this case, this is very risky case, and if this process will continue for 4 or 5 years and more, so the company will the company becomes a heavily debt company, and then the company prospects will take a halt or jolt. So with this, we have to look into, and then accordingly we will decide that yeah, this stocks perform well or not. Before looking into this, you cannot say that this stock is good or not. If you look at the promoters holding, so the promoters continue to remain their stake, and they did a minor slight divestment of their shares. But mostly the promoters and few significant substantial holders are having around 70% of the stake in the company, and the promoter non-promoters, or we would say retail investors, are having a mere around 30% of stake. So the when the stock like this, where the promoters and the substantial or significant investors are holding 70%, and retail investors participation are very less. So it shows that the promoters are the company is totally run and totally dependent on the promoters. And also the promoters has approved, are in the process of approval for the purchase of the the Latim lifestyle that is being operated for the resort business, and that is solely financed from the preferential capitals. So it means that they are also willing to pay. They are also willing to pay from themselves, or pump the money for another acquisition. It seems that it it shows that they see some prospects in the company, and they think that the sustainability of the company will obvious in few years. And these all are the things that we have to consider, and accordingly we will decide whether this stock is better for us or not. So with this, I will say that before, I am not giving any portfolio services relating to purchase and sale of share of any company, either this company or any company, none of the company. I will say that before investing into stock market, please consult with your financial advisor, and then only invest into stock markets. The purpose of video is solely for educational and I wish that it seems to be an informative video, and it gives an insight in particular to the retail investors on how to look into financials and fundamentals of a company before investing, or before taking a decision that whether this stock is good or not. With this, I conclude myself. Thanks for watching.